Good evening, and you're all very welcome to the last session of the day. It's been a long day. The air is a little bit warm now in the room, and there could be a tendency to nod off a little bit, so we'll try to avoid that happening. This is the leaders panel, but before we begin the panel, I think it's traditional for those of us with Irish roots to try to bring out any personal associations we have with Croke Park. In my case, I am actually delighted to say my grandfather won an All-Ireland hurling medal here in 1918, 99 years ago, when he was one of the winning Limerick team that year in the hurling final. I'm not so happy to say that those genes seem to have skipped several generations. So a bit like Declan, I'm afraid this is the closest I'm going to get to performing in Croke Park. Now, as usual, what we'll do with the leaders panel is we'll reflect back on some of the bigger themes of the day, and we'll try to leave you with a little bit of food for thought to go and enjoy over drinks a little bit later. We intend to touch on some of the themes. That's not me in our boardroom up there. Actually, I wasn't photogenic enough, apparently. Here we go. Brexit. I don't think there's any avoiding Brexit in one of these discussions. The future. We'll see what that might hold. Regulation. The question there is actually regulation friend or foe. IFS 2020, what can we do better? And if we have time, the economic outlook for the insurance industry. We have a super panel, and in just a moment I'm going to ask them to introduce themselves rather than my risking getting it wrong and saying things that they wouldn't want me to say. I'll let them advertise their own abilities. But before I do that, I'd like to make one short observation. Well, it's me, so it's not going to be entirely short. Reading through some of the recent surveys ranking the biggest risks to the insurance industry, it struck me that yet again, and this happens year after year, one common theme was the very high ranking given to regulation as a risk. It's very, very clear that we need strong and effective regulation, and I would hope that no credible insurer would dispute that. But for the CEOs of reputable insurance groups around the world to consider regulation a risk to their very business seems to me that something has gone wrong. And it's gone wrong either in the way that insurers are regulated or with how regulation is perceived. Now, this isn't a criticism of any particular system of regulation, and it's certainly not a criticism of the industry's perception. It's simply an observation that something is out of kilter here. When I get into my car, I might find it very inconvenient that I have to stick to the speed limits, stop at the red lights and stay at the right side of the road, correct side of the road. I might quibble about, actually I do quibble about the speed limits in certain places, especially the place where I very unfairly got 3 penalty points. But I absolutely accept the value of road traffic laws and of the enforcement of those laws. There's certainly no threat in those laws to my getting from A to B. And what concerns me is that laws that are seen as a risk to business, rather than perhaps an inconvenient but overall beneficial system for instilling public confidence, risk fundamentally failing in their objective. Regulation posing a risk to unscrupulous insurers is a very good thing. Regulation being seen as a significant risk to reputable, well-run insurers, that's unhealthy. Well, it's no secret why insurers see regulation as a risk. It's because it's so complex, it's so expensive to comply with, it slows down innovation, and it frankly takes too much senior management time. On the other side of the fence, regulators have no vested interest in complexity and expense, but they need to be satisfied that senior management are across the insurer's risks and that senior management are putting risk, management of that risk, governance and compliance at the very heart of their business. These are two very different perceptions of the same thing. And to my mind, the only way to reconcile these different perceptions is for regulation to get together with industry, and for the industry and regulators to collaborate much more, not on discussing regulations that have been drafted, but on actually framing regulation. And we've never been good at that. Public consultation after the principles of regulation have been settled is too late. Honest and open-minded input from all sides from the very outset, with sensible give and take, is the only way to produce regulation that works well for everybody. Now, I'm not holding my breath on this, but I do think a very good start might be locally to reinstate the industry panel to the central bank and to have industry's input at an early stage on all stages of regulation being developed. But I do think that Solvency III, if it ever comes along, will be far more effective if we all work on it together. That's my thought. Thank you.
Okay, my name is Frank Mee. I'm the current president of Insurance Ireland, and for my day job I work with Allianz Worldwide Care, which is the Allianz Group's international health insurance company. It's #1 in the world in its niche, having been set up 17 years ago in Dublin. And I'm also, for our sins, we've been put into the part of Allianz that's seen as the most digitally aware, called Allianz Worldwide Partners. We're there with the travel assistance and global automotive parts of Allianz. So I can touch on that later.
Can you hear this microphone? Yeah, great. My name is Julian James. I'm president of global markets at Allied World. We are a global insurance company. The business I'm responsible for is our business in Europe and Asia. I've had a slightly checkered career. I've spent 23 years as a broker. I've spent 10 years working for the Council of Lloyd's, working for the Lloyd's insurance market in London. And I'm very happy and delighted to be here and share my thoughts with you.
I'm David Flandro. I'm head of analytics at JLT. That includes actuarial, CAD modeling, strategic advisory, and sector research. I've had a completely checkered career because I've just been in stock broking and banking and broking, reinsurance broking. So I'm the intermediary here, and you can blame it on me.
We will.
Okay.
Excellent. Okay. Well, I'm glad to see that our microphones are working, and I'm also glad to say we weren't on the technology panel because our credibility would have been shot right away. Can we start with Brexit? We've had a panel on Brexit. I know, Paul, you've touched on Brexit already today. But Frank, as the president of Insurance Ireland, of course a senior executive in Allianz as well, I'd be interested in having your perspective on Brexit. How is it going to affect Ireland? What of inward investment, for example? Would it enhance our chances there of developing the industry?
Okay, we heard a lot of people speak on, particularly on the Brexit theme, about regulation, and at the risk of being booed off the stage, I'm going to have a contrary view. Earlier, I think it was Garvin O'Neill who said it was the ultimate no-brainer that Ireland should be the obvious location for UK companies looking for an EU base post-Brexit, and I agree 100% with that. It's an absolute no-brainer, but that's not what we're seeing. We're seeing businesses going to Germany, Belgium, Luxembourg, Malta, and we're seeing countries like France and Netherlands being #2 in the races for new companies. So there's something wrong. People were talking about regulatory arbitrage, but in Insurance Ireland we don't see that really as the issue. Manuela Zweimüller and Jerry Cross talked about convergence and all the work that's going on to create a level playing field. So either the level playing field is about to be created, or it's already there. So we don't see that as an issue. For us, the biggest issue is where regulation fits into the Irish financial services ecosystem. That's the big issue for you. But for us, earlier on, Jerry Cross told us that the Central Bank of Ireland does not have a promotional mandate, and it was for others to do that. Now, I would say that that's a puritanical luxury for us in Ireland to have that view. Other EU countries don't have that position, and to a greater or lesser extent, the regulators work with the rest of industry and government in promoting the insurance industry in their countries. And we can see the manifest results of that in recent months. Now, it's important to say that Insurance Ireland is not looking for brass-plate operations. It supports strong, fair and proportionate regulation. But we don't see a contradiction between regulatory independence and being part of the financial services ecosystem. Earlier today, Dr. Paul Ryan deputised for Minister Murphy, and he talked about the IFS Ireland banner, and he also talked about the single team Ireland identity of people going out from Ireland representing the single team. And if I can use an analogy, we're here in Croke Park at the moment, and if we're sending out a team around Europe to promote Ireland, I put it to you that that team is missing one of the key players. He's not even on the field. And this is really important for us. We see this as an urgent issue for government to address it. We need to rebalance the situation and bring the central bank back into the ecosystem. Now, arguably it's too late, because I know, as somebody who has to address Brexit, that with the clock ticking to March 2019, if you work the critical path backwards, you already have to make the decision, or to be about to make the decision. So it's probably arguably too late, but something needs to be done on that. So maybe that's a provocative suggestion, but that is how we see things, and it has to be said.
Okay. Yes, indeed, a provocative question. Maybe Julian, you're, I suppose, uniquely positioned as the director of an Irish insurance company, but at the same time sitting on the council at Lloyd's, to be able to judge this perhaps with both an inside and an outside perspective. How do you perceive Ireland as a location for UK companies escaping Brexit?
Yeah, Ireland clearly is a very attractive location. You know, we've had an insurance company here for many years, and we're very comfortable with operating in this environment. The question I get asked a lot is, you know, who is going to win in the whole Brexit scenario? And the reality is that no one knows at the moment. And I think about this question from the standpoint of running a global insurance business. And I think about, well, you know, I need to make decisions today about the operating environment in which we're going to find ourselves in 2 to 3 years' time. And to kind of stick with the Croke Park analogy for a moment, you know, at the moment, people who come here on Saturday, they go and watch a game, and they know exactly what's going on. You know, they know the rules that the game is being played to. They know the players on the field. They know how many players are allowed to turn up. And if you project that forward 2 to 3 years, no one knows what that game is going to be. Nobody knows who's going to be allowed onto the field. No one even knows what the game is. No one knows whether you're going to be segregated in 2 halves. And therefore, for any business person trying to make decisions, they know they want to play the game, but they have no idea what the operating environment is going to be. So what does a rational business person do today? A rational business person goes out and develops plans for multiple scenarios. And a company like ours, we have options to trade here in Ireland. We have options to trade through a Lloyd's platform, and Lloyd's have developed their own solution to, you know, how they navigate through the Brexit scenario, whatever it is. We also have, as a global company, options to trade out of Bermuda, Singapore, Switzerland, which is actually our main domicile. And the reality is that despite what all the politicians say, what's happening at the moment is that people are evaluating their contingency plans, and they will press the button on those contingency plans when people know what the rules are of the game that is being played. And until that happens, you know, the rhetoric that's going on at the moment, and, you know, we're unfortunately going through an election in the UK, so we're having to listen to too many politicians at the moment. But the rhetoric that's going on is all about positioning between the UK, the EU, member states. But there is no real substance to it because you don't actually know. So the scenario that's going to exist in 3 to 4 years' time, or 2 to 3 years' time, is very, very unpredictable at the moment. But I think it's very important for, whichever country you're running, whichever side you're on the political debate, to understand that businesses have choice, they have the contingency plans in place, and they will make their decisions based on what they see is the operating environment. And I'm just going to finish with one point, if I may, is that what businesses want is they want certainty about their operating environment. They want to know what the business is going to be, the business environment is going to be like, the tax environment, the labour environment is going to be like in sort of 5 to 10 years' time. And at the moment, the reality is that nobody can answer that question.
But to your point on certainty, Julian, and to Frank's point on timing, the only way to deliver absolute certainty is to assume a worst-case scenario and to act on that now in order to be able to continue, or would you agree with that?
I would, but I was asked to address a group of MBA students about a month ago at my old business school, and I was asked to talk about the financial implications on Brexit for the UK economy. And I said the same thing to them, I don't know. And what I said to them was that we're all developed contingency plans. And what surprised them was that all the businesses have rehearsed the worst case scenario, and we're all ready to press the button depending on what it's going to be. But I will tell you that if you're a business person and you're making decisions, and in Frank's business they're making decisions over 5, 10 years, Lloyd's came up with a Vision 2025 as to where they see the market, we are looking over a long-term investment horizon of 10 to 15 years. And the times that I've been involved in those decisions, and you sit down with a government in Asia, or you sit down with someone in China, they will give you certainty for the next 10 to 15 years. I was very involved in setting up the Lloyd's business in Singapore. And I remember sitting down with the Singapore government in 1999, and they said, this is what we're going to do for the next 15, 20 years. This is how big our business district is going to be. This is going to be the tax environment. This is going to be the labour environment. And decisions were made based on that.
I suppose the one advantage, though, Julian, is that a government in China, for example, knows it's going to be in power in 20 years' time. I could listen to this for a long time, and I have a lot of other questions on Brexit, but I'd like to move on because we have a lot to cover, if that's okay. And the one area that I've always been a bit mystified about, and that I think David can help to demystify, is the macroeconomic effect of Brexit on Europe and on the European insurance industry. And to prove just how spontaneous a question this really is, David has produced some slides to help us to understand that.
No, but I won't torture you with my slides just right away. I just wanted to say, just touching on what Julian just said, I think you said the word contingencies. I think you said timing, some certainty, options. What was the other one? What Julian has explained beautifully, and I don't mean to get too academic here, is real options theory. This is what companies are doing is they're trying to establish real options for themselves around Europe and in the UK and in Ireland, depending on what happens. So that depending on what happens, they will have a way forward. And this is absolutely the economically rational thing for companies to do. Some of the decisions will be made on the potential for regulatory harm pursuant to Brexit. Some of them will be made on the option to grow pursuant to Brexit. But Julian's exactly right. We just don't know what the outcome is going to look like yet. And so businesses are doing the rational thing, which is trying to find options. And you can almost price these like you would a call option or a put option. We at JLT have just opened an office in Stockholm. Part of that was based on the fact that we think there are really strong commercial opportunities there, but it certainly doesn't hurt to have an additional European jumping off point. And I know that this is the way that a lot of companies are looking at it. In terms of what Julian was saying about Singapore, it always irritates me when people compare the Singaporean healthcare system to the US healthcare system, because, completely different countries, vastly different populations and everything else. But the point does hold. If you look at Eurozone GDP in context, one of the things that we have to remember in Europe is that actually, if I skip ahead here, in 2010, the EU was the largest economy in the world in nominal terms. None of this purchasing power parity stuff. I'm talking about real economic output. The EU was the world's largest economy. Therefore, it had the world's most important regulatory regime, certainly in insurance, because insurance penetration is higher in the EU than it is anywhere else in the world, especially if you throw Switzerland into the mix, which I know you don't. But anyway, the EU will no longer be anything close to the largest economy in the world in 2019. It will be probably the third largest economy in the world, after China and after the United States. Now, if you want to talk about regulatory uncertainty, we Americans are a great example. We are good at regulatory uncertainty. But the Asian economies, as Julian was explaining, are very good at regulatory certainty. And that's where most of the growth in premiums in the world of insurance are taking place, certainly in brokerage, certainly for us. And so we mustn't get too far ahead of ourselves in terms of our own importance. At the end of the day, what insurance companies want to do is make a profit. And Europe isn't the only place for insurance companies to make a profit. In fact, it's arguable that the cost of equity is higher in Europe than returns on equity for the insurance sector, not the case in Asia. I'm just saying that this is as much a commercial decision as anything else, and Europe and the European Union will have to compete for capital with bigger economies with their own regulatory regimes. Now, for Ireland, as a Yank, I naturally have a soft spot in my heart for Ireland. I wore my green tie today and everything, but I do think that Ireland is structurally in a very good place to take advantage of this. You've got, especially vis-a-vis Brexit, because you speak English, you have what I would call something like Anglo-Saxon common law, which is the law on which most British legal contracts are based, which can be helpful. You have a very competitive corporate tax rate, as we all know, and you have a high degree and a high concentration of talent. So I know that this is a very top-down view, in contrast to what we heard from Frank, which was a much more bottom-up view. But I think that there still is quite an opportunity for Ireland to succeed in the macroeconomy. Just quickly, go ahead.
We agree 100%.
Okay, on that.
With all of those positives, yeah. And this is the dichotomy. Why are we not succeeding?
Absolutely. I'm going to skip over a couple of things here. This is just way too much stuff, and I'll refer back to some of this. We also mustn't forget that we're having a reinsurance renewal in a week, and it's in Florida. Rates online are so low now that we're almost back to where we were in the 90s. Rates have been falling for a long time. Interest rates are low as well. It's not like this business is insanely profitable. AM Best came out just yesterday. I think they showed a combined ratio for the sector of 105, right? So it's not like we're fighting over a lot of profit here. These companies need regulatory help to continue to grow, and the business just isn't as profitable globally as it used to be. I know we're going to talk more about this, but there are other economic factors that are affecting the sector. Inflation's picking up, especially in the States, not quite so much yet in Europe. Reserving is getting worse, and that's shown in these slides. I know I'm going through this really fast. And then interest rates appear to be coming up, which can hurt balance sheets. So what's my point here? Insurance companies have so much to worry about. This is one difficult operating environment that we're in. And I know that this is probably going to sound a little bit too U.S. free marketeer, and I'm sorry about that, but I think that regulation needs to be smart. It cannot be punitive to insurance companies. And I think Julian's absolutely right. We need certainty as fast as we can get it so that the cost of those real options doesn't outweigh the cost of doing business.
Very good. We have spent a very, very large amount of time on Brexit, but I actually think all of those points hadn't come out during the course of the day. I think they're all really interesting and very useful to know about. I'm just going to take one question. There are a number of questions which may be relevant to things we're going to talk about a little bit later. Paul, I'm having as much, there we go, as much success as you in using this gizmo. Just very quickly, following Brexit, what's the likelihood of Nexit, Grexit, and the fall of the EU? Maybe, Paul, that's probably one for you.
Listen, let me just add one thing to that discussion. I have a much more humanist theory about why big companies are relocating. Because ultimately, in the C-suite, there's all, probably your guys had an inner Swedish person that they always wanted to be, and there's somebody else has an inner Belgian. There's a lot culturally going on.
Nobody has an inner Belgian.
Clearly, somebody at AIG, at Lloyd's, had an inner Belgian. Look, right now, this afternoon, we've got the Polish Prime Minister made a speech in Parliament saying we're going to defy Brussels, rise up against them, reject the European elites. So this is, I think they're going to go the same way as Hungary. They'll get an Article 7 proceeding against them, which is a yellow card in European Union terms. Yeah. To people like me who are trying to fight for Britain to remain in European Union, this has come too late, as unfortunately the clear obviousness that Turkey will never join. So it's by being firm from the centre, what the real powers can do, I think, is to make the exits that matter less likely, by actually applying the rules of the club you're in. Now, this doesn't impinge, I think, on the regulation of finance. We're talking about basic things like the rule of law in a place like Hungary and Poland. So the more we see the European Union project a vision, act according to its founding principles, and really establish, if needs to be established, a two-speed and a two-tier Europe, as Juncker says is one possibility, then you mitigate the risk of all the other exits. I think, however, we're coming to a crunch on Brexit, on the Greek potential exit. The government there has no intention of exiting the European Union and no intention of exiting the Eurozone. But the IMF could pull the plug on the whole thing if it just does not stump up and ultimately basically facilitate, as it keeps saying it's going to, the resolution of Ireland's of Greece's debt problem.
Okay. Julian, did you want to make one quick comment?
I'd just like to add one point, actually, which is that all the politicians in Europe, whether you're in the Commission, whether you're running a country or whatever, you have a responsibility to acknowledge that all businesses have a choice these days. And most of us have a choice globally. Most of us have the choice of investing in the US, South America, Asia, Europe, Ireland, UK, whatever. And my responsibility is to our employees and to our shareholders, and it's to deliver the best return that I can to our shareholders. And I will make capital recommendation decisions, investment decisions based upon that. And I don't think we should ever lose the point that we need to be reminding politicians that they need to make, whether it's Ireland, EU, or anywhere else, an attractive environment in which to operate.
Okay. Can we move on briefly to the small subject of the future and what that might hold? Obviously, we've heard a lot today about technological innovation. I want to come back to something that Denny Kessler said a little bit later as well. But if I could start maybe with you, Paul. You've written extensively about economics, the future of capitalism. What does the future hold for insurers?
Well, let me start by saying somebody close to the team that made Google's DeepMind artificial intelligence told me this story. For about 3,000 years, we've had an orchard. You can't automate it. It needs human hands, eyes, smell to work. For about the last 20 years, we've had the technical ability to automate an orchard. That is, a drone flies in, picks the apple, barcodes it, drops it in. You've even got the beginnings of this in agri-tech already. With something like an artificially intelligent computer, it doesn't have to have general intelligence, it just has to be as good as this Go-playing computer. You just say, show it an apple, and you say, how do we best make 1 million of these? And it starts from that. It doesn't start from what the human processes have been for 3,000 years and try and replicate them with machines. It starts from the problem. And it can solve the problem better than we can. That's what we found out when the computer beat the Go master. It thought, we know what it thought, what's the least likely move a human would make here? And it worked out there was one move with a 10,000 to 1 chance of being made by a human, and it made it. And that is what made seasoned people cry when they saw it. Because that's the future of all industries. Now, what does it mean for you? I think two things. It means technology has tended to make things more complex and sometimes, therefore, more dangerous. The combustion engine car caused a lot of deaths. The information technology makes things less dangerous because it makes them simpler and more predictable. So a Tesla car, 150 moving parts. Your car outside, if you haven't got a Tesla, 10,000 moving parts. Which one do you think has got the most risk attached to it? Now, so risk, I think, technology will move risk in general in the world out of developed countries. So this graph about capital allocation, looking with higher yields, higher premiums in the developing Asia, makes total sense to me because it means that we will technologically solve a lot of the problems that insurance is there to mitigate. I think the other thing is, however, and this is the specific contribution I've tried to make in my work, is to point out that what information technology does is also make things cheaper. And processes that need to happen, in which there's a business opportunity, will become cheaper. And I think that, I'm not just talking about the serial collapses in price of all the technologies around us, which we see, but if you look at the blockchain, for example, which hopefully most people have heard of and know what it does, the real challenge for something like this is that we're all sitting here fretting about regulatory regimes. If you make a contract through blockchain, there is no regulatory regime. It's a peer-to-peer relationship. Now, of course, regulators will create regimes around that, absolutely. But everybody with experience of peer-to-peer technology kind of understands that the regulator is there by tolerance of the two parties in the deal. And that is a whole world that you haven't even, I think you have stepped a foot into, but when you plunge your entire body into it and stay there, that's going to be the real challenge for the financial services industry.
I'll send my inner Belgian into that pool instead of going in myself, actually. Frank, can I come to you on this? Because I was just struck with what you said there, Paul, about taking a 3,000-year-old process and trying to automate it is a particular way of looking at things. And maybe that's where the insurance industry goes wrong, actually, is to say, this is how we've always done it. Now, how can we speed it up with automation? Frank, do you want to say a few words about Allianz's digital strategy and what you're doing?
I'm not the original expert in this, but I know what Allianz is doing. And first of all, on the opportunities, obviously digital allows insurers to give the customer much better service. We're all very much into that space. InsurTech, that's not an existential threat to the incumbents. We see it as a way of doing our job better. We see lots of cost-saving things out there like robotization and artificial intelligence. They will save lots of costs for insurance companies. That said, the societal effects of this are absolutely scary because a whole swathe of middle management will be taken out in the short term by this. That's another day's work. But on threats, what threats do we see? Well, Allianz, like AXA, like all of the big companies, is afraid of its life that it'll wake up some morning and find that Google has eaten its lunch. I think we've all heard of that. We're worried about other people getting into the value chain, about other people getting control of data. These are the things that worry us. And because of that, Allianz is spending heavily in this whole digital area. And I mentioned in the introduction that as well as my day job, and health, I get to see what we're doing on travel assistance and on global automotive. So just let me talk about global automotive for the moment, looking at the future there, because that gives an idea of the kind of disruption that we've seen in the airline industry, in the book industry, in banking or whatever. So what's coming down the tracks? Again, we talked earlier today about autonomous cars. Literally in a generation, the chances are high that the whole fleet will be autonomous. What is that going to mean for motor insurance? It probably won't exist in the way we knew. OEMs, the motor manufacturers, will have to take out a product insurance. So that's massive change in a generation. But in the meantime, I'll just give you another analogy of massive disruption that you may see in the motor insurance industry. I was in Munich earlier this year, and the colleagues showed us a prototype of a connected car and an app built by one of the major German manufacturers, and it was hugely impressive and frightening. Obviously, the car is chock full of sensors, so the app will tell you everything you want to know about your car, what it's doing, what needs to be repaired or whatever. The app had a module that clicked in if you had an emergency. You press a button and somebody will appear very, very quickly to sort you out. But there was another module, an insurance module, and what that does is it measures the driving behaviour of the owner of the car, how much acceleration, how hard he brakes, how fast he goes, where he parks his car, and that was giving a points discount based on how good that driver is. So if you use that, just think about it, if I can use a rude word, the motor manufacturers are bastards. They're really tough negotiators. So if they end up with this kind of data that they're able to tell an Allianz or an AXA that they have these 300,000 drivers who have points that show they're really, really good drivers, that's control of a very, very important piece of data, and you're going to find that existing aggregators or brokers or whatever are just going to be moved aside, and these guys are going to go in. So that's just an example of the kind of change we see coming along the way.
Very good. Julian, just very briefly, I know we're running rapidly out of time, but could I get your take on the future?
Brief, but to be honest, I'm really excited about this conversation. I'm a real optimist about the future for the insurance world. I wish I was starting my career right now, because Frank's right, there's going to be massive, massive change. Part of that's going to be driven by technology, part of it is driven by the ability to analyse data. But if you step back and you think about the core product that the insurance industry offers, which is basically taking risk of somebody else, the world is getting a riskier place. The need for insurance and the demand for it is going to continue to grow as global economies grow. And whether technology leads to a safer environment, if you you accept that argument, it doesn't change the basic premise that people still need insurance. Sadly, people still die through earthquakes, through other natural catastrophes. Sadly, we still continue to do terrible things to each other as a human race. People still want basic insurance products. And if you take the analogy that Frank used about the airline industry, the airline industry is completely different from how it was 30, 40 years ago. How tickets are sold, how routes are flown, stuff like that. But the demand for air travel is the highest level that it's ever been, and it will continue to rise. And that's what's going to happen with insurance, and that's why we should be optimistic about the future.
Okay, I'm going to take one question here. We may or may not get to the rest of our topics. Let me try that again. It's a question to do with GDPR, and the question is, with a year to go to enforcement, how ready is the industry to comply with the GDPR, and what are the challenges insurers are facing with compliance, or are they even taking it seriously? I suppose GDPR is one of the things that could slow down the embracing of this new technology, Frank, using the information, for example, from the car. Would anybody like to? Yeah, David.
I think cyber, and correct me if I'm wrong, guys, but I think cyber is a really important part of GDPR compliance, and we've seen recently how can I put this, how bad at quantifying cyber risk so many companies are, and how far away from quantifying cyber risk so many insurance companies are. Yeah. And I think to really get to a strong understanding of the underlying exposures and to buy reinsurance, as I would say, appropriately to cover yourselves, the industry needs to have a stronger way of managing the risk exposures, and then we probably need to have a better standalone market to provide the right cover for those exposures. But I'll just agree again with Julian. This is a facet of change, cyber risk. It can be terrifying, which it is, or it can be a big opportunity. And complying with the GDPR and making sure that we've quantified those exposures, we've got a bigger opportunity to do that now than we ever have. And the predictive technologies and the big data that we can deploy and the processing speeds and the talent and creativity and imagination that we need in the insurance sector to address those exposures pursuant to GDPR. As you say, it would be really fun to be starting your career now in insurance, because that's the kind of problem that a young, intelligent person, an ambitious person would want to get their head around and solve, and there will be more of those problems to solve. Anyway, I've probably taken it outside of the scope.
Are we prepared for the regulatory burden of GDPR, and is that going to get in the way?
The short answer to you is that, well, certainly I can speak for my company, we're taking it very seriously, because we're looking down 2 barrels of a loaded shotgun with a deadline coming fast.
Yeah.
I understand it's going to cost us a lot of money to comply, but it's not an option, and yes, it is taken very, very seriously.
Speaking of looking down the barrel of a shotgun with a deadline arriving fast, we have 51 seconds. I'm going to take one more question, because it does coincide with the next topic that we wanted to look at. Although Frank's views are controversial, can the panel provide some specific suggestions right now what the agencies involved can do to win more Brexit business into Ireland, even in this time of uncertainty? And I think this goes to our question on EIF2017 and the creation of new jobs in Ireland. Maybe if everybody had one suggestion, perhaps just to start with you, David.
What is Ireland's comparative, not competitive, but comparative advantage? What is your Ricardian comparative advantage compared to the rest of Europe and compared to the UK? And find that and exploit it.
Okay, very good. Julian, any thoughts?
I would say take lessons from how other growing financial centres around the world have attracted inward investment.
Okay. Paul, any
I
thoughts?
would echo that and add to it the cultural dimension, because these are talented people, and Brexiters. I wasn't joking when I said they were looking for what other country would you really like to be in?
Yeah.
And it's the culture, and it's making to that talented and young and globally orientated and liberal-minded young workforce. The country has to look really attractive to live in.
Very good. Frank, in addition to the regulatory
Again, just to
point,
repeat what I said, Kieran Donoghue talked about IDEA Ireland. They do a fabulous job, but I think they need the regulatory arm at least, if not riding beside them, at least fairly close behind them.
Very good. Okay, I think we did cover the regulation point, and I think we got into a lot of the economics, so we've covered our agenda, albeit not in the order that I'd expected. So thank you very, very much for staying on and listening, and I'd like to say thank you to the panel and thank you to you. Thank you.